Okay, to our final presentation of today's event, and thank you very much, and thank you for the questions as well. The final presentation is Mosman Oil and Gas. It's the AIM-listed helium, hydrogen and hydrocarbon exploration, development and production company. June has been a very busy month for this business as it repositions itself to focus on its helium projects. Andy Carroll has been with the company for many years and was made its chief executive last October. Andy.
Good to see you, Sarah. Thanks everybody for joining this afternoon. So if we kick into the slideshow, we're looking at three commodities here, but focusing primarily on helium as our focus going forward, and hydrocarbon as where we have been and have some heritage assets. So if we kick on through the disclaimer into the next slide, lays out the key points of the Mosman opportunity. First of all, the market cap. So we have good liquidity and a very modest market cap. On the right-hand side, you can see the comparison with the other AIM helium companies. I think Helium 1 has actually recovered from that snapshot from last week, but we are significantly lower market cap, I think because of the issues in the past with capital raises, which have repeatedly sliced the share price. We've now rebooted, cut corporate costs 40%, and are able to now announce and roadshow the helium focus, which has been actually work in progress over the last 2 years, and with assets that we've had for a long time, in which helium potential has become very juicy. And I'll talk about the helium price, which has driven that. So our two core assets in the Amadeus Basin in Australia, where the helium percentages are very high by global standards, which is very important in the commercialization process. EP145, we have the exploration now funded by farm out to ASX listed company Greenvale, and 155 funded by farm out also. The new news that really enables us to talk about the full pivot into helium is the step acquisition into a helium project in Colorado, USA, that I'll talk about in more detail a little later. The near-term activity with 5 wells to be drilled before Christmas this year, picking up on Adam's point, low-cost drilling is a good thing, and so these are also shallow wells, which enables low cost. I think our well cost is perhaps 1/10 of the helium well cost in Montana, and that's one of the reasons that we find this area very attractive. It also has our key criteria of a high helium content. So our pitch is that we are compelling undervalued helium opportunity. Callum talked about the hydrocarbon or the oil and gas price matrix. Interesting, in Europe, the gas market won't be complacent. In the US, 3 years ago, we were producing gas and selling it for over $7.50. Earlier this year, it went below $2. It's now recovered, but it's still below $3. So we're talking about something that helium that's 100 or 200 times more valuable than methane hydrocarbon gas. We're also able to target low-risk locations in a proven helium area, and simply put, that would be not a question of whether helium is there, it's a question of what percentage of helium we will encounter in these areas. I touched on the market cap. I think what also stands out for an exploration company is that we do actually have cash flow from our oil and gas assets in Texas. But going forward, our strategy is to expand on the helium. So next slide, please. touch on our existing assets. We have enjoyed strong revenues from our oil and gas projects in Texas. It's not a big step for us to move into Colorado. Our man in US is based in Dallas, which you can see is not that far, in fact, from Colorado. And in Australia, our exploration is so well advanced that we have a prospective resource. If you take that 20 BCF of helium, multiply it by the current helium price, you get the remarkable number of $13 billion. So very significant potential in the helium sector, primarily due to its price. Next slide, thanks. Our team, I've shifted from technical director to CEO last year with a bit of reorganization. Our man in Dallas is very experienced. At one stage, he was the head of global exploration for BHP. He now is very keen to lead our business development in helium. He actually studied helium at university in Saskatchewan. He grew up in Canada, where there has been an ongoing helium business. Very in-depth experience in the US, where we are very comfortable. I think one of the other speakers talked about time taken for applications and developments and approvals. We actually moved to the US. We moved out of New Zealand into the US because it's very simple and easy to operate in the US. That's why we're happy with that being one of the operating areas for us. Julie Dawes has been working helium exploration for the last 5 years as it became clear that our assets in Australia, that the juice was really in the helium content, still strong economics in the oil and gas potential, but helium is the standout, and we have a strong technical team on board with obviously a virtual organization of consultants, but a very cost-effective structure. Next slide, thank you. And going into the helium strategy on the next slide. So, Callum didn't get into the helium price, but look at that trend. Clearly has kicked off in the last few years and is heading skywards. Why is this? Because supply in the US is in decline, and on the right-hand side, you can see demand for helium. So we are in clean tech engineering applications. So one of the investors mentioned investor interest in oil and gas is in decline. It's looking at things like semiconductor manufacture with NVIDIA, a big consumer of helium. SpaceX, space rockets use a significant amount of helium, MRI, and a wide range of science and technical applications, all of which require helium, an expanding market, at the same time as global supply is in decline. And most importantly, US supply is in decline. We're very happy to be supplying domestic markets in both US and Australia, where there is a shortage. Next slide, thank you. So the strategy is not a recent pop-up. We have had the areas in Australia in the Amadeus Basin for since IPO about 10 years ago. And it's really the shift in helium price which has brought this to the top. We've done a global review of where we want to be. We're very happy to be in Australia, and we see the opportunities in the USA. So move next slide. I'll talk about the what we think the key ingredients are. As I say, we like the US and Australia. It's the right area to invest. Some areas in the US have the high helium percentage that we see in the Amadeus. I agree with the previous presenter talked about infrastructure and drilling costs. So where we are moving into the US at very low cost, in the Amadeus Basin, the costs are not so low. So we have managed that by farming out where the drilling costs are higher. But we do like to be where there's established production, and we are going forward very much focused on the helium opportunities. Next slide, thank you. So looking at the areas in Australia, our permits in purple, EP 155 and 145. 145 is geologically an extension of the Mereenie anticline, where that oil and gas field has been in production for over 30 years. The little red dotted line going up, which is north from Mereenie and Palm Valley, is a gas pipeline to Darwin, where there is an existing helium plant, which is now becoming available as the offshore gas field that it was servicing has gone into decline. Great infrastructure. You can fly into Alice Springs, rent a truck, drive out to Mereenie, drive out to our permit, road and rail going through Alice Springs. Significant drilling activity in the area, and importantly, the helium percentage is high in those areas to the south, but at Mereenie, there's not above the right basement rocks, which you see in the dark green. It still has 1% helium, and the price of helium now means that the operator is looking at putting a helium extraction plant at Mereenie. So good to see that that's moving ahead. They're one step ahead of us, but we're not far behind. Next slide, thank you. So we are sufficiently advanced in 145 to have prospective resource, big numbers. We've got a wide range on that, lots of upside, but we recognise that there's more work to do. We have got 2 wells that were drilled in that permit, both of which found hydrocarbons, but were not tested for helium. So, but we are surrounded by wells that do have helium. And so 145 we like because it's advanced, but as one of the other speakers said, it's nice to have a sequence in your portfolio. And 145 is also high potential, but a little more work to be done at 155. Next slide, thank you. So in our move to helium, which has been worked on for some time, we recently announced the acquisition of an interest in the USA, which is the areas in bright yellow there within the broader yellow county of Las Animas in southeast Colorado. See that conventional helium extraction was from a low percentage in that large red gas field in Kansas and Oklahoma. US government had it nationalized, helium nationalized as a key commodity for when Nazi Germany was looking for dirigibles, and after the Hindenburg decided hydrogen wasn't the right way to go. Been nationalized, and helium collected and stored in the storage facility in Texas. That field is in decline. The storage is getting used up. It's been privatized. But we're very happy to be adjacent to heritage infrastructure, which is obviously connected to the markets. And the markets include now domestic market of semiconductor plants being built in Arizona. So helium can cryogenically separated on the lease, trucked in small quantities or by pipeline in larger quantities. And there is already helium production in Las Animas County that I'll touch on the next slide. So focusing in, helium comes from uranium and thorium material in the granitic basement. It needs faults and a migration path to get up into here. It's the shallow reservoir of the Upper Lyons. There are other deeper targets, but the Upper Lyons is very attractive and demonstrated production. On the right-hand slide, the red blob in the middle is the model dome, produced before helium was privatized, nationalized by the US government, depending where you get your numbers from, somewhere between 7 and 11% helium content proven at model dome. There were some deep wells. Texaco drilled a well here looking for oil and gas when oil and gas prices were high in the 80s. Didn't find any hydrocarbons, but it did find strong helium numbers. And further to the east is presence of helium. But as you can see in the diagram, there's some CO2 coming into the system. Now, some people think that we can make money out of CO2, so it's not a deal killer, but it does mean that your helium percentages tend to be a little bit lower. We're fortunate in this area that there's a listed company called Blue Helium listed in Australia. They have the blue lease areas there and going into development. And in some of the leases that they didn't pick up, there's an active private company drilling and producing helium in this area. So we're quite happy to come in behind and pick up on their lessons learned, and very keen on this low-cost drilling in a proven helium province. Next slide, thank you. We are in the happy position of having our exploration funded. As Jeremy was saying, it's becoming increasingly difficult on AIM and generally in the capital markets to get people interested in risk projects. So we have funded 145 by farm out, funded 155 by farm out. The exploration costs in our US acquisition are modest, and we're able to fund those from cash flow and the sale of oil and gas assets. Pleased to have announced the first sale of oil and gas assets that's due to complete in September. So we are happy to have funded exploration with 5 wells to be drilled before Christmas, followed by drilling in 145, followed by 155 in due course. Next slide, thank you. We do still have oil and gas assets, and next slide, I'll 2 main areas. One that we call Cinnabar is in Texas, and Stanley, which is in Texas near Houston. Stanley, we have a sale contract for $1 million on completion, plus other payments that are subject to performance criteria. We participated in drilling 5 wells there, all on production. We've enjoyed strong revenues, but when oil price is strong as it is now, it's also not a bad time to cash out and get rewarded for the current production, but put the money in the bank and use that money to fund the helium exploration. Cinnabar was, we know there is a lot of oil in the ground at Cinnabar. There are 2 wells that have been producing since the 1980s, still producing. That holds the leases. We drilled a well which had some operational issues in drilling with lost circulation, and it was still working to resolve how to get that well on production. But the primary focus has been Stanley, and one of the benefits of selling Stanley is to be able to, our small team, to be able to focus more time on resolving the issues at Cinnabar, but also more importantly, to focus on helium exploration going forward. Next, thank you. And next slide. So our final slide today, we have the near-term activity with the Vector Helium project with 5 wells before Christmas, 145 seismic this year, drilling next year, 155 following on behind that. We see significant value add on the remaining asset in the US, but we're not planning to put a lot of money into that asset, but we do see that we can add significant value. We're looking forward to the completion of the sale of Stanley and very much helium focus moving forward. So that's the presentation. Thank you, Sarah. Open it up to questions.
Many thanks. We've only got 30 seconds left for questions, but how clever of you to incorporate NVIDIA into your presentation, NVIDIA being the most valuable company in the world due to the AI frenzy. And of course, as you explained to us, AI needs helium. And so therefore, it just underscores how undervalued you are, which brings me to Chris and Dale's comments. Chris says Mosman is currently 10 times undervalued compared to helium-1 and helix exploration. So what do you see as fair value for Mosman? How will you get there, and in what time frame?
So a key part of that process is we transitioning from oil and gas to helium. There's a certain process for AIM companies that are changing direction. So we had to manage the sale of the asset so as to not trigger any AIM concerns, and also manage the acquisition of the helium project in the USA. We did look at alternative ways of doing this last year, but it's really now the two deals that we've announced in the last few weeks that have allowed me to come and talk about Mosman as a helium company. And I think helium has not been on the radar, perhaps, as Callum said, he's a commodity analyst, but he doesn't cover helium. It's not on everybody's radar. But I think the investors are a little smarter than that. And clearly there's been interest in helium-1, and Helix has done very well. I think Mosman, it's only now that I can roadshow and talk to the market about the helium assets that we have, and allow the market to be informed and make their own opinion about the valuation of Mosman, given the quality of our assets, the revenue from our existing assets, and our cost structure, our technical team, and the path ahead.
And that path ahead, Chris is just asking about the time frame.
So we see the vector wells being drilled before Christmas this year. There's near-term activity. We do see other business development opportunities. It's a very underfunded out there. There's lots of small private teams that are desperate for funding, as with Vector. So there's more business development opportunities, but primarily in terms of what's on the table at the moment, it would be the Vector wells before Christmas, and activity in 145 as well as 155.
Lovely. Andy, we'll have to leave it there. Andy Carroll, the Chief Executive of Mosman Oil and Gas. Thank you very much indeed for joining us.